Morning, Rip.
Hey, morning, X. How you doing?
I'm doing well. I feel like I need to explain the hat. I
Yeah,
was born.
I was questioning that, especially for a guy coming from Philly.
Yeah, I am a Phillies fan. I was born and raised a Phillies fan. The only thing that could be worse is wearing a Mets hat.
All right.
But my son was on the local baseball team until the season got canceled, and I was the coach, and we were the Yankees. And I really need a haircut.
Oh,
Really
yeah.
need a
Well,
haircut.
put that back
And
on.
this is currently the cleanest hat that I own. So if you'll forgive me.
We'll let it slide this time. I appreciate the explanation because I know there's some Philly fans that would not be as forgiving.
Yeah, I wanted to get that off my chest before we got into things. Rip, why is the stock market so darn high? It is now we're May 2020. We are depending on where you put the start date, we're maybe 4 months into a pandemic, and the stock market is priced as if it's early 2019 and there is no pandemic. What's your take?
Yeah, that's a great question, and it's one that I get a lot frequently. And it's one of those things that I think we almost have to distinguish between the economy, and Main Street and the financial markets being Wall Street, because what you're reading on the newspapers or seeing on TV, it definitely seems more gloom and doom, and things are definitely down. Unemployment is high, economy's down. So why is the market up? And again, I think it's just important to distinguish that the market is a forward-looking indicator. And typically it's looking out, 12 to 18 months in the future. So if it were, looking at today, then that would be a different story. But the market already priced in a lot of this pandemic, which is why it sold off so violently. And so now, I think that's important that the economy is going to lag the financial markets because the financial markets are typically looking out into the future. So that's typically what I'm telling clients in that conversation.
I think that's right. I like to describe the stock market as an expectations machine. It takes everybody's expectations and boils them into a price. But expectations don't mean accurate forecasts. It just means what we expect. What we expect could be wrong. So
Sure.
right now, we're expecting a good outcome. And I hope it's true. I really hope that it is a good outcome. But that expectation could be wrong, which would mean the market's too expensive. So I guess all I'm saying is it seems like we've priced in an optimistic outlook for the recovery.
So should we be moving everybody to cash?
I don't know about that, I'm not so sure the market's wrong. We might turn back on like a light switch. I was talking to a client in the construction business, and they barely missed a beat. They're right back to building. So it may be an accurate forecast, but only time will tell. Something else that it seems to be the case, might be true. You remember when Donald Trump was elected in 2016? That feels like 100 years ago.
I do remember. I don't know how anyone could forget that. But and that's not a political statement, but it was I think a pretty politicized event.
The reason I bring it up is because a lot of people, when interviewed or surveyed at exit polls, did not indicate that they voted for Donald Trump or would not admit to voting for Donald Trump, when in fact we know quite a few people did. So I'm thinking that it's similar now in that people are talking very pessimistically about the markets. A lot of people I talk to are ready for another downturn and ready for it to drop out again as soon as we realize how bad things are. So maybe we're talking one way, but actually investing a different way.
I tend to think that people, just human nature, they extrapolate based on current events. And so if things are really bad or they look bad or the media is basically saying how negative things are, then they think it's going to continue that way, and vice versa, right? When the economy's strong, the markets are booming, They think it's just going to continue that way forever, and so we know in reality that doesn't happen.
How do you think the stimulus worked? So I'll frame it a little bit. As soon as the demand went away because of the shutdown and people weren't able to go out and buy the things they typically buy, the government, to keep it simple, attempt to fill that hole with a giant pile of cash via the stimulus in various forms. And I think an easy way to put it is, if they got it right, if they put just enough money in the hole, we might be okay and come out of this thing as the stock market has it apparently priced now in the US. If they didn't put enough in, maybe we have a problem. And if they put too much in, maybe we have another problem that is something like inflation. How do you think we fared with all of this, with the stimulus package?
Yeah, I mean, you're hitting the nail on the head. It's a balancing act. And, I think to the government's credit, they acted quickly, much quicker than they did the last recession in 2007, 2008. And I think that it is working in terms of, helping small business owners. Yeah, it's not going to be perfect, right? There are people that probably receive funds that shouldn't have, or you read about people returning the funds after they, got the negative publicity. But, I think overall they acted quickly. They want to try to keep the economy going. It's a tough situation, between the health of the nation and, the financial health as well, right? So, you're balancing between the economy and physical health. So I think the stimulus worked from the standpoint of, if you look at the market, the market's telling us that they expect that things are going to look pretty good, as we talked about earlier. So we'll see. I mean, there is the question about potentially inflation. There's also another question about, we kind of have a lot of debt out there outstanding right now, and at some point that has to be paid back. But it's a double-edged sword. It's a tough call, but I think they stepped up and did the right thing.
It seems to me that deflation is just a reality in some industries because those industries cannot operate. So the demand is gone, essentially, or severely depleted. So I think the deflation argument may be more industry by industry. And on the inflation side, if the recovery goes well and inflation is a product, inflation might just be a sign that we got out of this thing. And it may be inevitable, but I think in that sense, it's a little bit less of a concern. If inflation skyrockets, of course, that's a problem. But if we do end up having some inflation, it's probably because the demand machine kicked back up, and maybe that's not such a bad thing in the end.
Yeah, we may see more deflation in the short term. It just depends on how quickly the economy can bounce back. But if you were to ask, the Federal Reserve or most government officials which of those scenarios they would prefer, they would definitely say inflation, or at least in my opinion, is they would say inflation, not deflation, because deflation can be a negative cycle, and it just feeds on itself. I mean, if nobody's spending any money, the economy, essentially starts shutting down. And so they absolutely would want of the two scenarios, the inflationary scenario, in my opinion, and that probably is more of a longer term reality or potentially risk, just depending on if they can manage that.
We talk a lot about diversification when it comes to managing money. How do you think diversification works during this so far?
A lot of people don't like diversification because there's always something that's not working in the portfolio. But that by nature is really one of the reasons why you diversify a portfolio, is you want to have, uncorrelated pieces of the portfolio that don't move in lockstep with one another, right? So that way you can spread your risk around and not have as much volatility, or potentially all your portfolio moving in the same direction. In this case, you don't want your whole portfolio to go down at the same time if there's a pullback. So, it's never perfect. I think it was Warren Buffett that said diversification is the only free lunch in investing. I tend to agree with that. With long term, and that's all that we can really count on is, looking at the long term, are we believers that having a diversified portfolio works? And I would say yes, it does work. Now, do correlations tend to go up when the market, goes down? A lot of times that is the case. And I think some of that is just because we're operating in more of a global economy at this point. But that's the really one of the few things that we can count on long term is if we own different pieces, different countries, different size companies, that it's going to create a smoother overall return pattern. So what are your thoughts? You think it's worked this time?
Well, cash worked well. So far, so good. If you had cash, it didn't lose value relative to stocks, so that was a win. Bonds worked okay, but I think a lesson was reinforced with bonds, that not all bonds are equally low risk. So what happened was government bonds maintained their value. Treasury bonds actually went up in value in a lot of cases. But corporate bonds had some problems and are still having some problems. And if it was thought going into this that bonds had no risk of losing value, however temporarily, then I think the lesson from the textbooks has been reinforced that credit risk or the risk of default can cause bonds to fall in value. And that could be quite disturbing for folks who really loaded up on credit risk to try to get a higher yield, a higher interest rate on their bonds. And it didn't feel like a lot of risk until all of a sudden it was a lot of risk. And some of those portfolios might have been down 5 to 10% at the worst part of this. So I think generally bonds worked well as a diversifier against risk in stock markets, but they didn't all perform equally well in that function. And if nothing else, I think hopefully we take a credit risk a little bit more seriously when we look at corporate bonds.
Right. Yeah, that's the key too, right? Is that bonds are safer than stocks over the long term, but they still can move in value. So making sure you've got proper liquidity, proper amounts of cash is still really, really critical.
Agreed. Last question. Work from home. Is this going to stick? To what degree are companies likely to shift their thinking permanently about investing in more of a work from home style, less emphasis on giant headquarters, satellite offices, all that kind of stuff? What's your gut feeling at this point?
Yeah, I think that there is a larger change that in place right now. Employers are much more open to this model of work from home than they probably ever have been, because they're seeing it work. A lot of them are seeing it works, right? They've got most employees are going to work. They're going to, they're not going to just sit home and watch Netflix all day. So I think there's a little bit of that initial concern that employers have. And I think I've been talking to a lot of business owners that are reevaluating their commercial real estate needs, because they can, if they cut back on some real estate, maybe they have several locations, then they can use those funds for other things. Like, one small business owner wanted to provide medical insurance for their employees. And so they thought, well, if they close this, this one of their remote locations, they could reallocate those funds. So I think the most business owners are much more open to the model. I will say that, I'm starting to hear some of the employees say that they want to get back to work. They want to get back to the office setting. Now, whether that's because they've got young kids or, some other challenges, let's say, that make it, more difficult to work from home, or maybe just some of the nostalgia wore off in terms of working at their home. Whatever the reason is, I think that there's probably going to be a balance. Maybe it's not 5 days a week in the office. Maybe it's, 3 days a week in the office, 2 at home. And as long as the results are being produced, that's the main thing. That's really what most most business owners are concerned with. So that's what I'm hearing. What are you hearing?
Well, it's hard to say. I think it's industry by industry. We're already seeing announcements coming out of Silicon Valley that some of those big tech firms are making a serious commitment. They're going so far as to say work from home first as a primary method of working. So it looks like it's happening. I don't know what the downstream effect is on the rest of the market, but that's effectively a deflationary type of effect,
Yeah,
particularly in commercial real estate.
I saw a headline just this week that said work from anywhere. So maybe we're shifting over to RVs now and going to try our luck there.
Well, something tells me that if you were to stand up right now, we would notice that you're wearing swim trunks. It is Friday after all.
Yeah, I wish, but no, I hear you. If you take it to that extreme, then that's probably what would happen.
Rip, thanks for your time today. I'll talk to you next week.
All right, that sounds great. Have a great Memorial Day weekend.
You too.